All right. Okay, here we go. Welcome back, everyone. This is yet another live stream podcast. We're still debating when we're gonna go on some kind of different schedule, but it made a lot of sense to do the live stream today. Kind of feels like we already have some very steady following here. So I wanted to make sure that we talk about WTC1, WTC2 classes today, just because we've just started them. The new semester, fall semester, started last week. So if you would like to join us, this is exactly the time to do that. I wanted to show you the curriculum for both classes. As you could see, quite extended. Still trying to figure out how I could draw here. And we definitely have a lot of chat reading here in this version of the WTC one. So original thought was maybe like to separate chat reading from Wyckoff, but I mean those are just like so close that I just decided to go and to put a lot of chat reading into WTC one. So what are we gonna do? We just started, and actually tomorrow is the second class. So again, like if you want to sign up, this is the time. We are doing and working right now on the leaf level, the bar by bar analysis. So how difficult this could be? I mean, it's a bar by bar. Well, in a lot of cases, what I see with students, with trainees, is everything is okay. But then there's some missed observations or some missed deductions or some missed analogs. And until you actually have a really good sense of how bar by bar should be analyzed, you always will have, some kind of erroneous deductions about something. So it's very crucial to understand the bar by bar. If you understand bar by bar, then you can see the same principles in the swing by swing. And obviously, the main principle behind both is either improvement or deterioration of the dominant and the opposing forces. How does income and effort influence in the result of the price? And that's the main deduction about, whether it's a local trend or a global trend. It's just kind of the same. And then obviously, when things change, they change into certain structure, whether it's an uptrend, downtrend, a trading range. There is nothing else really. There are just distinctions. You could have trading ranges within the construct of the uptrend. You could have trading ranges that are major accumulation distribution phases, where institutions, do their work. So therefore, understanding how we change the behavior and start going into different structures is very essential. This is more Wyckoffen type of way of thinking about the market. So we'll study the change of behavior. What is the preconditions for it? How could you visually see this on the chart? How does the change of behavior start? How it develops, and so on and so forth. What to expect in terms of the targets. And then we'll talk about the levels that are being created by some of the points on the chart, like buy and climax, automatic rally. That could be already two levels for you to identify potential support and resistance. Obviously, we want to look at all of the structural levels, where the structure is being broken previously, where it's being tested. You could add also to that very important distinction on the price character. How does the price interacts with those levels on the approach, at, after, and on the test? So I'm seeing a lot of great correlations where you could make deductions just based on the price character. If it approaches well, if it overcomes, overextends, definitely a continuation and a strong continuation with the higher tests and so on and so forth. If the approach is much weaker, still bullish but weaker, then maybe a limited extension. The test that comes much faster, maybe a deeper test, and so on and so forth. So all of this obviously is of interest right now to a lot of our students. Again, this is the first time that I'm combining it with the Wyckoff method. So therefore, just if you wanna join us, do it now. We still have the interest plan, interest free payment plan. You could extend your payments into 4 months, I believe. It's still at this point. Actually, I think that one is already gone. It might be already like 2 payments, not 4. So as you could see, like there is some kind of, timeline there as well. On the Wyckoff side, obviously, we're going to go through the most obvious things. We'll talk about the price cycle, the logic behind it, the institutional participation in the price cycle, where exactly they're coming in against the weak hands, how they scoop that liquidity, how they absorb all of the shares before the uptrend starts. We'll talk about Wyckoff loss, and then most definitely the most popular topic that I'm being asked on the Wyckoff methodology, it's the Wyckoff phases and events. So after the chart reading, the way how we will see the structure, the way how we will read the swings and the bars by bars, those things will be, like events, Wyckoff events will make so much sense. It's just going to be so visible right there. And then we'll talk about finally, the bias, how we are making a deduction as to what we're seeing, Wyckoff labeling. We'll do some exercises on that. Then we'll jump into comparative and relative analysis. Whether it's cryptos or stocks or futures, it doesn't really matter. The principles are the concepts are going to stay the same. We're going to give you some proprietary stuff there as well. And then we'll jump into tactics and trade management. So we'll be discussing everything from the point of entry to the stop loss, how we move the stop loss, uh, add-on streams, point of exit, post-analysis, and also the Wyckoff trading plan pro forma. So that's the work that we have for WTC1, 15 sessions, 2.5 hours each, so it's about 40 contact hours altogether. We're also going to have the technical assistant. I'm extremely excited about that. Bill is going to come on board, and each week after my class, he will be meeting with students and explain the same concepts in his own words and answer any questions that you guys have. So that work will be done as well. And some other exercises along the curriculum that we will have. Wonder if we have any questions on this. Kind of like a very long introduction here. Okay. All right. Yeah, I don't see that. Okay. And really quickly, uh, on the WGC2, these are the case studies that we're going to go through. This is just definitely more advanced than WGC1 curriculum. So some of the people are just taking both at the same time. These are or could be converted into the setups for your playbook. So one of the interesting aspects of the WTC2 class, the practicum, where we practice on the bias game, where the practice on the action sequence is having those, case studies, and now we're adding the back testing of those case studies. So a lot of the times when students, trainees come to me, they say like, okay, how do I gain the confidence? Well, in what? In what are we trying to gain the confidence? In execution? Then execution is just knowing exactly what to look for with a very high level of confidence based on your research and backtesting and simulation of those common situations. So people usually understand all those us fail, and we don't do this work. And if we don't do this, then our minds don't have enough examples of how it looks. What are the preconditions? What is the actual setup? How does the reversal look? What's the follow through? And so on and so forth. So with that, in WTC2, we will be doing this work on the back testing. Okay, let's see. What else do we have? Adrian. Adrian is in our classes. Is asking, Roman, is it true the 9:45 rule? I am assuming this is 9:45 a.m. Eastern time. Wait till 9:45 before trading to avoid the volatility. I read pretty good the trading ranges long term, but my morning 9:30 to 10:30 Eastern and Q is pretty bad. Okay, yeah, I understand the question. I mean, in a lot of cases, definitely you're gonna have what I would call a discounting mechanism. So, meaning that you are gonna have the open where you are gonna have some volatility. Even today, let's quickly look at this. Okay. Yeah, even today, we could see that from the open, there is really nothing that we can do here, really. There is, first of all, not such a big extension below the support by the opening bar with a lot of tail. So you expecting some kind of reaction, and we just don't have the follow through. And both forces are diminishing in its strength right away. So, like here, I see the demand is going down and supply is going down at the same time, right? So what is this here then? This is no land. There's nothing's going on except for introduction of the initial impulse. Both forces are colliding and then both forces are depleting. This area right here still has a lot of exchange. So you see both supply and demand. You see this from the tails. You see this from the volume signature. So obviously this type of starts to the session, could be tricky. Oof, what do you do, right? Or you have, a much simpler way to start here, right? So this is just a play on the two volume spikes, the result of that you are going to have in a downtrend some kind of reaction that's going to be preceding the final exhaustion. If you're lucky, you're gonna get something like this, where the trading range actually comes before the US Open, right? So you have your trading range right here. You have a much larger structure here. So these are two obviously related. And it's just a part of one big structure going into the upthrust, testing it, local upthrust action, and then reversal on the increased supply. So into the open, you're already seeing, you know, the background, which is to the downside, the trading range, which is not necessarily that strong. We can't overcome this bar right here. A big attempt, to push the price up and out on such a huge volume signature, and yet inability to do so with the supply tail test. Demand is diminishing considerably. Attempt to test again into the open, rejection. You could be opening a position here or at the open itself. This would suggest that you could touch either this or this level. As you go down, you're already seeing how much better this is. It's better than this or any other reactions in the trading range. Some demand is coming in on these bars, but there is always progression to the downside. So you have to wait. You have to wait for some kind of level to be hit. This is the first time that you hit some kind of level, if I still have it for that day correctly. Definitely demand is coming in, but doesn't do anything. Still strong, doesn't do anything. Still strong, but now climactic. More demand, more demand, more demand. So now we're gonna rally more out of this place than this or this because there is more demand that came in. So we're expecting better rally than this or this. There is a small counter trend trade here. So this is what defines the trading range, the change of behavior and those boundaries of the stop in action and the automatic rally. Most of the price has to be contained within these boundaries. Okay, well, I'm easily distracted here with the analysis. Just kind of cannot help myself. My mind always goes into like, let's analyze things. Okay, but yeah, so you could most definitely wait for 15 minutes. That could be one of the things to do. You could wait for 30 minutes. I've met this rule with different, time periods that people assign to that, and that's fine. It's just you might will actually come in the middle of the session if you're not available, like I do sometimes when I have other things to do, and try to find trades somewhere else, somewhere later, depending on how the structure developed. It's much easier than at the open, where volatility is so immense, and you really, really have to read well the chart at the open, which force, not only is dominant, but could produce some kind of move immediately and not go into some kind of trading range formation. Yeah, interesting question. Very specific. Okay. Okay, next question from Serge. I've developed my own Wyckoff sprint indicator and scanner. What's a good way to estimate the upcoming jump's strength? In other words, how to catch 20 to 150% jumps in price versus 1 to 2% jumps. Well, I mean, two things come to mind right away. Serge, I mean, if you're catching 1 to 2% jumps in your trading, it could be something related to to the way how you just behave in the marketplace, just in general. But I don't want to discuss the psychology today, or like I don't want to assume that that's the case. Let's just think about this from the perspective of from the technical perspective. Um, so usually you would be expecting some precondition to such event, right? So we're looking for this. We're looking for something that will extend. We're not necessarily looking for this. In other words, how would I know that this upcoming rally is going to be better than the previous rally? Well, that's pretty simple. You have to assess what kind of supply is coming in relative to the supply that came in the previous analog, and just assume that if selling is not as strong and if demand still will be there, you're probably going to have better rally than what you had here. And here we go. Obviously, there is a little bit more to that. There are, specific sequences that you could develop. There are specific failed sequences that you could develop as well. There was a point in a pocket of resistance there at the top for this formation in gold. So there might be some scenarios where the price comes first, consolidates in that part, absorbing latest supply and then moving, or like this. This is pretty convincing, right? Okay. So definitely study the character of the supply and the um, and how supply and demand are changing the sequence of dominance. That would be the most helpful there. And most definitely would like to see you getting more than 1 or 2%. Yeah. Okay. So the rest of it, I see that we're going into like, can we analyze this? Can we analyze that? I'm probably not gonna do like all of this stock analysis. If you guys would like to see the analysis of your stocks, we absolutely do this. So come to our WMD class. I teach it together with Bruce Fraser, and we'll definitely look into your stuff. But let's definitely talk about the Bitcoin, just because it's probably one of the most popular assets. So we've talked about how the weakness was expected on this reaction right here. So we said that this reaction is going to be better than this. So it definitely developed like that. I'm still seeing here some pockets of demand on the way down. So for instance, like in this area right here, in this area right here, in this bar right here, in these two bars right here. So there is some demand that we're seeing, and rightfully so, because there is a level here that we are coming into. There is that level also from the previous trading range to the left. So this should be something. Now, how much of it is coming in? Not a lot. Compare it to maybe like even, well, this is comparable here before we start going up, and pretty similar in terms of how we're making one load into the another, right? So there is the shortening of the thrust after this low right here, but this is definitely weaker in the character. Oh, interesting. In the character of the down bars, but not necessarily in the character of the up bars. So yeah, there is, and there is slightly more volume Hmm. Wow, so tricky. Look at that. Okay, so we could say that, yeah, there is marginally more demand in the second case than in the first one, but supply is there is more supply too. That's why supply is a little bit better in this area. The recovery of it definitely is better in the first case. This to this. Look how long it takes to recover. Here we're traveling in one bar, we're traveling into this combo of three. We're retracing about 95%, right? Well, we're almost there, but it definitely took longer, right? One, two, three, four, five, 5 bars. So the demand here is not as strong and the supply is more present than in this case. So it still feels like we're weaker here than here. So with that smaller distance, I think we probably first of all attacking this bar right here into this level, and then the second one is right here, 1 and 2. Okay, well, let's see how it could go, because this improvement right here that we're seeing to the downside, uh, it might suggest that this rally here would be not as good as this one. So could we possibly just do this into level 1? And then from here, just go into some kind of, possible correction again, just staying in the trading range. So pretty interesting how Bitcoin, is going to develop. And we still could fall quite considerably here short term, obviously. I mean, the uptrend is still intact. There's this uptrend in blue. It's still on. There's nothing going on. We're just in the structure of this uptrend. And we could possibly go up, then try to retest again the support. Maybe we could even fail lower where, well, this is still allowable. This is the next big level. So we could easily fall to this level and even lower. Why not fall almost all the way into this impulse? This impulse right here. This is a pretty strong area. So this confluence right here would create this structure again of higher high, higher low, higher high, higher low, an uptrend. But this would also show that there is less a degree of strength by the demand at this point of the uptrend. Uh, something different from what we had here or here. But we definitely could be in a much larger structure. So any of these tests, whether we are recovering, let's say, from here or from here, it's still bullish, uh, long term. Until we actually break the long-term stride, we still should be thinking about continuation, and definitely watch for the signs that bring us into like the overbought condition, like this one, or maybe we're not reaching that overbought and that shows some element of weakness. So let's just see what locally is going to develop. But so far, I don't see the long-term break. Look at the volume signature. What is happening? It's actually all going down. So it's more a function of the deterioration of the by the demand rather than by the supply. And by the way, our impulse here, like the biggest impulse of buying uh, after the initial accumulation buying right here, was concluded around this point right here. So that coincides with the previous all-time high, this level right here. Okay. So this has been tested here. Okay. What if in the bigger picture, can you imagine if we were to touch this and then recover from there? I mean, would that be okay? And I think yes. I mean, for the long-term trend would not care about, like this type of pauses. So there could be variations. That's what I'm saying. I'm definitely seeing weakness by the demand, but I'm not also seeing, some meaningful supply that's coming in. I mean, yes, some supply, some profit taken, whatever that is incoming, but it's not like super damaging. I mean, like look into, let's say, areas like this. There is way, way more volatility there than, let's say, right here. So I hear some uh, kind of like assessments of the Bitcoin where people go into the idea of the we are under distribution right now. Maybe locally, but not globally, not by any means. Okay, let's see. All right, so everything else, all of the other questions seem to be about like some stocks, which we're not going to go into. I think that's it for today, guys. Like sweet 30 minutes. Hopefully that was helpful in some ways. I definitely want to encourage you to check out our WTC1, WTC2 offering. We just started the semester. This is the second week, so exactly the time to jump. Before, by the way, the prices are going to go up next semester. So we're definitely seeing a lot of value, and we are adding a lot of value with additional material to the classes, additional exercises. So we know that it's going to cost more. So with that, thank you guys so much, and I'll see you somewhere in the future. Thank you, guys.